Hey everyone, Coach Investor back to another video for today. So as always, we're going to go over 4 interesting companies in different industries that might be worth your while. We're already in the month of September, pretty crazy how fast this year has gone by. We've actually had a pretty good year if you look at the overall stock market. Yes, sometimes you will have better months than others, but that's completely fine. And as always, I repeat myself, I'd rather buy on a red day than on a green day. Now, company number 1 I want to touch on is a Dutch company, a payment processing company, a company that is actually down 50% since it reported earnings, and that company's name is AIDA. So as you can see right now, by the way, this is on the Amsterdam exchange. You can also find it in dollars. So the market cap is currently 24 billion euros. It's down 50% since 1 year ago, and year to date is down close to 40%. Now here you can see the comparison from the last 5 years when it comes to PE, EV to EBITDA, price to sales, price to free cash flow, and shares outstanding. Now clearly you can see that right now on most metrics, actually all metrics, the stock is much cheaper than before. Now you might say, okay, but there's a reason it crashed 50%, right? Because before it was growing extremely fast and now we're seeing a slowdown. Well, yes, you are 100% correct. But does that warrant this much of a crash, let's call it? In my opinion, no. And for long-term investors, I think the opportunity might be there. Because if we look at the highlights from processed volume is up 23% to 426 billion euros. Net revenue is up 21% to 739.1 million euros, but EBITDA is down 10% to 320 million euros. Now you might say, I don't understand why it's down. Well, because growth has been slowing down. Especially in North America, it has slowed down 23% year over year compared with 52% growth in the first half of 2022. By the way, yeah, the report in first half and second half of the year. Sorry if I mentioned quarter. So digital volume growth also slowed to 23% year over year from 55% in the same period. And North America has been an increasingly important contributor in recent years, making this development more significant to overall net revenue. They say here, profit outweighed growth for many North American digital businesses in the first half as enterprise businesses focused on cost optimization. We see the impact of sales team size that did not match our ambitions, particularly in North America. In the first half, the payment tech company added 551 employees, bringing its headcount to 3,883 full-time equivalent employees. Of the new hires, 75% were in tech roles to develop its young and mature initiatives. Now, I already announced the second pick, which is PayPal, which we've talked about on this channel before, which a lot of people have been talking about PayPal before as well. I already shared my opinion on that. I think risk-reward-wise, reward is much higher than the risk today, but I'll add a couple of extra tidbits here that you can use for AIDA and PayPal. So Simple Investing on X talked with an analyst covering both AIDA and PayPal, and he says the following. So the checks they have done in both AIDA and PayPal was interesting. On PayPal, he said given the low growth in unbranded volumes was having a negative impact on the stock, management changed its strategy towards enterprise pricing 6 quarters ago. The change led to very aggressive pricing as PayPal focused on shifting enterprise merchants volumes to PayPal through Braintree. Their checks suggest that prices were set at an interchange or even interchange minus, meaning PayPal was losing money on every transaction, which is also why we've seen transaction margin go down. Obviously, despite the higher volumes coming into PayPal's platform, shareholders were concerned about transaction margins. The new CEO of PayPal is looking to focus on boosting its value-added services to small to medium-sized businesses to offset this decline in transaction margins. However, the key is that PayPal Braintree cannot afford to be more aggressive here, nor does the analyst think PayPal will get more aggressive from here. As a result, he thinks most of the shift in share of wallet has already happened in the past few quarters, and the risk going forward is limited. In addition, he believes AIDA has the best-in-class technology among the payment players. Also, while the competition has a chance with domestic non-complex transaction, AIDA is the most cost-efficient when it comes to more complex transactions like multi-currencies, global transactions. As a result, as the complexity of payments increases in different markets, including the United States, merchants that were earlier tempted by low initial pricing by competitors are likely to return to Adyen over time, which has been the case as observed by Adyen's operational history. And so, to summarize that, they think that the worst is behind Adyen. Now, that does not mean that it's positive for one company and negative for the other. No, could be positive for both. We can see growth reaccelerate for Adyen, and we can see transaction margins for PayPal go up, as they will not be going down further with their offerings. Now, by the way, Adyen, it's been their mission from the start, offer the lowest cost possible while still operating at a safe margin. Now adding more information to PayPal, because of course we've heard this before, right? Apple Pay comes for PayPal's business. Well, here you will see more information. So Apple Pay keeps growing but can't catch Visa or PayPal. So as you can see here, the top 5 payment platforms in the United States and their percentage of market share globally is Visa at 15.08%, then MasterCard at just under 11%, and then number 3 PayPal just over 10.5%, American Express is 4%, and Apple Pay is just under 10% in the 5th place. Now, if you want to dig a little bit deeper, you can pause the screen and look at the various continents and where PayPal ranks and where the rest is ranking. And you can also pause the screen and look at this picture. Visa is the most popular payment option in 67 countries and PayPal in 63. So it's safe to say that PayPal is still quite dominant. Now, before I continue with this video, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, company number 3 is a semiconductor company, one that has been recently left a little bit behind because of, well, all the attention goes to Nvidia, and rightfully so. So this company is AMD. As you can see, AMD, well, it has come down from its $130 mark a couple of weeks, months ago. We got a nice little rebound here just over that 200-day moving average, which means we are getting some momentum back. RSI is still neutral. MACD is still bearish though, so keep that in mind. Now, looking at their history or their financial metrics historically wise, we can currently see that, well, compared to their mean of the last 5 years, PE ratio is now a bit cheaper, not by much. EV to EBITDA is more expensive, price to sales ratio more expensive as well. Price to free cash flow is a bit cheaper. Now, there is a reason for that. Currently, I would say that you can say that they're lagging behind Nvidia. First, we've seen Nvidia taking a hit. I mean, it was down 20, 21, 22% or so year over year, but AMD was still doing okay. Then we suddenly see Nvidia doing much better, AMD doing pretty badly. So, in my opinion, we might see that switch happen sooner rather than later, especially with their new offerings. Now, it was announced already in June that AMD has a GPU to rival Nvidia's H100. We will get way more information in Q4 when things get moving with regards to that product. So this GPU is targeted at AI and scientific computing. The GPU is being positioned as an alternative to Nvidia's H100, which is in short supply because of the massive demand for AI computing. Now, during the last earnings call, they said that AI cluster engagement grew by more than 7 times sequentially as multiple customers initiated or expanded programs supporting future deployments of Instinct MI250 and the MI300 hardware and software at scale. And here, basically the confirmation that the MI300 accelerators are starting production in the 4th quarter. Now, of course, right now we know that Nvidia is dominating. They have the majority of the market share. Apparently they have 1000% profit on those sales as well. Well, if you're the only player in that market offering the best-in-class products, you can price them as you go. But I think that over time, more and more companies will be offering other alternatives at cheaper prices. Now, that said, Nvidia can still be number 1, but that doesn't mean that everybody needs all the computing that Nvidia is offering. Some companies will need less, and they'll be very happy to pay much less for products that AMD provide or for products that Intel provide, and so on and so forth. We've seen this last year already with GPUs. AMD GPUs, NVIDIA's GPUs, RTX, they were 60% more expensive, while the performance was only 10% better. So for most companies, they'll say, okay, I'll pay 60% less, have 10% less power, fine. The performance will still be as much as I need. I'll be happy with that. And we actually get here some more insights from More Insights and Strategic CEO, Patrick Moorhead. So they believe that on the hardware front, AMD and Intel will be able to field competitive offerings to NVIDIA for both training and inference. Both companies will field very interesting offerings available in early 2024 for LLMs. Even upstarts like Grok have shown advantages on certain models and workflows for LLMs inference. Now, it's not AMD, but this is Intel CEO saying that our pipeline of opportunities through 2024 is rapidly increasing and is now over $1 billion and continuing to expand, with Gaudi driving the lion's share. Again, I think the more player in the market, the better it will be for most companies, and not everybody will need NVIDIA's products. Of course, they'll still stay number one, they still have the majority of market share, but I think that that market share will become a bit smaller over time. Then company number 4 is a company that is pretty popular, it's Alphabet. Now, Alphabet has been doing quite well since I call this the opportunity of a lifetime after their demo, their $100 billion mistake, let's call it, has gone pretty well. And lately we've seen some positive momentum for the stock as well. So RSI is now getting a bit close to being overbought. This is on a weekly basis, by the way. MACD still pretty bullish. And looking at the last 5 years when it comes to PE, price to sales, etc., we can see that it's getting pretty close to the mean. So right now, PE in the next 12 months, 22.3 times, the mean was 25. EV to EBITDA, pretty close to its mean right now. Price to sales is, let's call it, the same as in the last 5 years, 5.3 compared to 5.4. And then the last one here, price to free cash flow in the last 12 months, we're now at 24.2 times compared to 29.3. But here, as you can see, you're getting a lot of value because the company is buying back a lot of shares over time. And that's the luxury you have when you produce billions and billions in free cash flow. Now, with regards to Google, they have their Google Cloud Next event right now. So you're going to see a lot of AI features, new products, announcements. One of those here is a Gemini product, an AI model that smashes OpenAI's GPT-4. It will only be released, I think, by the end of the year. So keep an eye out on that. And then with regards to Google Cloud itself, so a quick reminder from last earnings call, they said that more than 70% of generative AI unicorns are Google Cloud customers. Then with regards to subscription, there is a good growth. Last year, we announced over 80 million YouTube Music and Premium subscribers. Sign up for NFL Sunday Ticket kicked off in April, and we look forward to hosting our first full bowl season on YouTube this fall. And then with regards to something that I mentioned not so long ago, well, now it is long ago, and that's one side of the business that is being overlooked still, and that's the Pixel phone line. Yes, I know it's hardware, but since they're paying billions and billions to Samsung, to iPhone, to get Chrome to be the default browser, of course it's helped with advertising, etc., seeing the popularity of those phones go up and up and up, it's going to generate a lot of money for that business. And so we actually have some statistics here. According to Global Stats, vendor data from July 2023, Google Pixel now occupies 2.46% of the North American smartphone market. It's the third largest Android brand in North America, bested only by Samsung and Motorola. This is due to a massive 20% year-over-year growth, according to Canalys data from Q1 2023. And in Japan, Google Pixel is now the biggest Android brand there, beating out local manufacturers like Sony and Sharp. It holds about 9% of the Japanese smartphone market share, a huge leap from the 2% market share it held in Q1 of 2022. Additionally, about 34% of all Pixel phones are now sold in Japan, while only 31% are sold in the United States. And with the Pixel 8 coming out later this year, I expect that growth to continue over time. I'll be a buyer of the Pixel 8, maybe I'll do a review on this channel whenever I get that. But don't sleep on that side of the business. Definitely don't sleep on the Google Cloud side of the business. As we've seen in the past couple of quarters, revenue there has been growing much faster than the rest. I expect the advertising market to come back pretty strong. So you'll see Google Ads, Google Advertising, YouTube Ads, should I say, grow as well. And then with Google Cloud, we've seen growth in revenue, but previously it was still unprofitable. Right now, we're getting 2 consecutive quarters of profitability, and it's getting better and better. So Google, although it's up quite a lot since the lows at the end of 2022, in my opinion, they are still flexing their muscles and showing that, well, they're not a small player in this AI race, not at all. So that will be it for this video. Of course, do share your 4 companies down in the comments below. Maybe some of them that I mentioned you already have in your portfolio, you're keeping a close eye on. Let me know down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.